Imagine this, a higher earner thinks that they have a tax plan, but what they actually have is a tax return. Those are two different things, and the unrealized gap between the two, it's costing them. So today I want to break down who does what in the tax world, why it matters that everyone stays in their lane, and how the right team, when it actually communicates, can pay multiples back to the person's financial life. Let's start here. Tax is the single largest expense in a higher earner's financial life, bigger than the investment fees, bigger than the insurance premiums. And unlike most expenses, tax has a planning variable. How much you pay is not entirely fixed. It actually depends on the decisions that you make and when you make them. That's why having the right tax professionals around you, it isn't just overhead, it's infrastructure. The question isn't whether we need tax expertise in our corner, it's actually whether the people you have are actually covering the full picture. Let's start with the CPA. A CPA's job is accuracy, compliance, and financial truth. They take everything that happened in your financial life over the past quarter or the past year, and they get it right. Entity elections, depreciation schedules, K-1s, W-2s, deductions, making sure that they're all filed correctly, defensibly, and on time. That is not a small job. For business owners and executives with complex returns, a great CPA is the foundation that everything else sits on. Think of it like a building. If that foundation is off, everything built on top, it's completely unsafe. But there's a lane distinction. A CPA reports history. Their primary obligation is accuracy on what already happened, not engineering what's to come next year. Now, some CPAs go deeper into advisory, but some don't. We'll get into more of that. The credential alone, it's not going to tell you what you have, so you have to ask about this. Now, here's where most people have a blind spot. Tax planning is not the same thing as tax strategy execution, and a quality financial advisor, they should be doing the planning. Identifying that a Roth conversion window is open in a lower income year, for example, that's tax planning. Modeling the tax impact of a liquidity event before it's going to close, that's tax planning. If you're thinking about how deferred comp gets paid out across multiple years to manage our tax exposure through the brackets, that's tax planning as well. So these are functions that live inside a well-run financial advisory relationship, and your advisor should be seeing your full picture, flagging those moments, and building them into your plan. That's not really stepping outside the lane, that's actually the lane. But tax planning is one thing. Tax strategy execution, that's another. And when the complexity goes beyond what falls inside of a financial advisor's lane, that's when the right move is to bring in a tax advisor, the implementer, the specialist. Think about it this way. The financial advisor could be like the surgeon. They're running the operation, they have the full picture, they're responsible for the outcome, but when the moment calls for it, they need the anesthesiologist, someone whose entire practice is built around one specific high-stakes function. They're really good at what they do. You don't want your surgeon to try and do both. The depth of the expertise required to do that role is too significant and the cost of a mistake is way too high. So a tax advisor brought in at the right moment for a qualified small business stock exclusion, let's say, a defined benefit structure that expands beyond the pre-tax retirement capacities. But that's not redundancy, that's precision. And it's the financial advisor's job to know when to make that call. So when you put it all together, a CPA who owns the compliance and the accuracy function, a financial advisor who owns the planning and then coordinates the picture, and a tax advisor who executes the strategies that require deep specialization, that's when things that were invisible start to become visible. And I want to address something here directly because this definitely comes up. There's this concern that building this kind of team is expensive. And the honest answer is, compared to what? The cost of not having the right people in their lanes and talking to each other, compounded over time, that can be the difference between building a legacy and leaving one behind on the table. See, when a team communicates, it doesn't cost you, it actually compounds for you. So the takeaway should be this. Know what your CPA covers. Know whether your financial advisor is doing real tax planning or they're just managing a portfolio. And then know when your advisor is bringing in the right specialist or whether they're trying to do it all themselves. If none of them will work together, that's information too. The team that communicates is the team that finds the opportunities, and that's where the tax-efficient wealth gets built.